If you've ever felt like you need a PhD just to understand what cryptocurrency is all about, well, you're in exactly the right place. Today, we're going to break down crypto in a way that actually makes sense, using simple ideas anyone can get. So, let's just dive right in.
You know that feeling, right? You hear people throwing around words like blockchain, mining, or wallets, and you're just standing there thinking, are they even speaking English? Trust me, you are not alone. That's how pretty much everyone feels when they first dip a toe in this world.
But don't you worry, we're going to cut through all of that confusing jargon. And to do that, we're going to use a really simple analogy that almost everyone knows, a classic board game.
All right, Section 1, welcome to Crypto Monopoly. To get this, I just want you to imagine we're all sitting around a table getting ready to play a brand new game. We'll call it Crypto Monopoly.
Now, in this version of the game, instead of that colorful paper money, we're using these cool, shiny digital coins. But here's the huge twist, the most important rule change of all. There is no banker. Yep, no single person is in charge of the money, and that changes everything.
So you're probably thinking, if there's no banker, who keeps track of who has what? The game board itself does. It's designed to automatically keep a perfect, unchangeable record of every single move for every single player. And that right there, that's the first big piece of the puzzle.
So, how in the world does a self-running game board actually work? What does that even mean? Well, that brings us right to Section 2, the self-running game board.
You see, that magical game board has a real name. It's called the blockchain, and all it is really is a permanent, public, digital ledger of all transactions. Just think of it like a giant, shared digital notebook that everyone can see, and once something's written in it, it can never, ever be erased.
So let's bring that right back to our game. The absolute easiest way to think about the blockchain is just as the game board's permanent memory. Every move, every payment, every single thing that happens, it's all recorded right there on the board for everyone to see. Forever.
And this is why people get so excited about this stuff. Because every move is permanent and out in the open. No one can secretly go back and change the records. You can't pretend a turn never happened. It creates this system that's built on proof, not just on trusting some person or some big company. It's transparent, it's fair, and it's incredibly hard to cheat.
Okay, so the board itself keeps track of all the moves. But who makes sure the moves are legit in the first place? And where do you actually keep your digital coins? Well, let's talk about the game referees and your personal token box.
This brings us to a word you've probably heard a lot, mining. Now, it has absolutely nothing to do with pickaxes or digging in the ground. In the crypto world, mining is just the process of verifying transactions, you know, the moves in our game, and then officially adding them to the blockchain. They're kind of like the security guards for the whole system.
The best way to think of miners is as the game's referees. They're actually super powerful computers spread all over the world, and they're all competing to solve a really complex math puzzle. The first one to solve it gets to check and approve the latest batch of moves. And for doing that work, the game says thank you by giving them brand new digital coins as a reward.
So where do you put all those new coins you just earned? You put them in a crypto wallet. It's really just a digital tool that lets you store and manage your cryptocurrency. It could be an app on your phone, a program on your computer, or even a little physical device like a USB stick.
Back in our Crypto Monopoly game, your wallet is just your personal box where you keep all your tokens. It's yours and yours alone. Simple as that.
Now listen up, because this is maybe the single most important part. Your wallet is controlled by a super secret code called a private key. And this isn't just a password, it's the actual proof that you own the coins. If you lose that key, your coins are gone. Poof! Forever. There's no forgot password button, no customer service line to call. That key is your one and only claim ticket to your money. Okay, so you've got your tokens, you understand the rules, what's next? Well, trading, of course. But just like any exciting game, this part comes with a whole lot of fun and a whole lot of risk. People buy and sell cryptocurrencies on platforms called exchanges. It's exactly what it sounds like, a digital marketplace where you can buy, sell, or swap one type of digital coin for another. Think of it like a stock market, but it's open 24/7 and it's all for crypto. But, and this is a big but, you have to know that not all exchanges are created equal. Some are kind of like risky, back alley trades. They're fast and anonymous, but you have very little protection if something goes wrong. Others are more like official stores with security guards and receipts. They're regulated and generally offer a lot more safety because they have to follow the rules.
And the second you start trading,
you are going to run smack into one of crypto's most famous or infamous features, volatility. That's just a fancy word for how much the price of something goes up and down. And in crypto, those price swings can be absolutely massive, and they can happen incredibly fast.
Sticking with our game, think of crypto prices like the chaotic roll of the dice. One day, the value of your tokens could shoot to the moon, and you feel like you're winning the whole game. The next, the price could drop, and suddenly, your digital fortune doesn't feel so big. It is one wild and unpredictable ride.
So, we've covered the board, the rules, the referees, and the risks. Let's just zoom out for a second and look at the one single powerful idea that ties all of this together.
When you get right down to it, the entire point of cryptocurrency is to build a system where anyone can send value directly to anyone else, anywhere in the world, without needing a middleman like a bank or a credit card company. The trust isn't placed in a person or a company. The trust is literally built into the rules of the game itself.
So, if you're going to remember anything from all this, let it be these 3 simple steps. First, it's a self-running game board, the blockchain. Second, the whole thing works because all the players and referees agree on every single move. And third, because of those first 2 things, you don't need a central banker or a boss to run the show. And that really brings us to the final thought here. What we have is a game that's designed to play fair all by itself. The rules are open, the score is public for everyone to see. So the only big question left is a personal one for you. Knowing the risks, knowing how the prices can swing, are you ready to roll the dice?